Thank you so much for that. Very cool to see where some of the folks that helped get the industry where it is today see it going in the future. We've got an amazing panel coming, or fireside, I should say, coming up from none other than Stani Kulechov, the creator of Aave. Total value locked, I just checked, was $26 billion. He's going to be in conversation with Romain Dillet from TechCrunch. Can't wait to hear what they have next. Please help me welcome to the stage Romain and Stani.
Hello, everyone. Stani, it's great to have you here. I remember that we chatted on this very stage, which was actually over there last year. It's been 12 months, and a lot has happened in crypto, at your company, Avara, in US politics, everywhere. A lot of things happened, so it's great to be able to catch up. A few days ago, you posted on X that the liquidity of Aave was standing at $38 billion, the total value locked. Why do you think this number is so huge, and why do people choose Aave over something else?
Well, it's actually 43 billion.
Wow.
And net deposits. But I think there's multiple things that tie into that. So, I mean, we started with DeFi when it wasn't really a big thing, and it was a handful of...
when was that? 10 years ago, something like that?
Maybe like in 2017, 2016, 17 was a time when we saw like first experimentations, and we saw Ether Delta. That was first kind of like implementation of a decentralized exchange. And I think now, over time, there's a lot of things that has made it easier and reasons to use DeFi. So one big driver obviously has been stablecoins, and stablecoins has been a big driver, especially during 2020 when we had a lockdown and interest rates were down, and DeFi became kind of like a opportunity for those users that were already in the crypto space and understood how technically use decentralized finance.
Yeah, there was also the NFT craze, as I call it. Why do you think NFTs were so popular and not necessarily DeFi taking the center stage?
I mean, the thing about DeFi is that it's really true utility. So if you look at some of these bigger DeFi protocols, they actually have a good purpose. They have a product market fit. And they also are decentralized organizations that generate revenue as well. So if you look something like the Aave protocol and the Aave DAO and MakerDAO, these are actually very useful protocols, and they're generating revenue as a DAO. So really good kind of perspective is that when you start a company and you try to reach product market fit, that is extremely hard. Second thing is that making a company profitable is extremely hard. Doing that as a decentralized organization, that is extremely hard. So being able to be here after years and seeing some of these DAOs and protocols being actively used and having billions of dollars worth of liquidity is really astonishing accomplishment.
Okay, so before we talk Aave V4, bring us back to the days 2016, 2017. Because you said this was extremely hard to start this thing, to get adoption, to turn it into a profitable project. Why did you start in the first place? Was it because it was an engineering challenge, because you really liked finance, because you looked at blockchain and you were like, oh my God, this is going to be great?
I mean, the big driver was really Ethereum, in the sense that Ethereum enabled this programmable computer, and one of the early ideas that you could effectively do is financial applications, because Ethereum derives from the blockchain underlying technology of Bitcoin, and Bitcoin trying to solve a financial problem, transferring value between the people. And for me, what was interesting is that first time ever you could actually program a system, financial system that is permissionless, that anyone can access regardless of their backgrounds and social status or whatever they are across the planet, and guarantee the execution, so no one can actually come in between you and a DeFi protocol if it's like directly integrated, and actually change the way the transaction will behave, for example. So that was a big driver there. And I think when we started, we saw a lot of centralized lenders also launching at the same time and raising hundreds of millions worth of venture capital funding. And what we saw over the past years is that DeFi basically proved its resiliency. So a lot of these centralized lenders, they don't exist anymore in the crypto space, mainly because of the poor risk management that they had. And the only thing really stood up really well is the decentralized protocols like Aave and proved the resiliency. So we liquidated a few months ago over 200 million worth of positions with just a few minutes without any issues across multiple networks. And that's a really big statement for resiliency. And virtually, if you look at today, the whole lending and borrowing space in crypto, it's moved fully on-chain. And I think this technology is very agnostic, not just to crypto assets, but in the future also for RWAs and traditional assets that are coming on-chain as well.
Okay, and so Aave V4, it's more than $40 billion in value locked.
And net deposits in total.
Yeah, net deposits. And so you're working hard on V4. Could you give us an update and the reason why you are upgrading Aave?
Yeah, one of the things what Aave is very known for is that it has extremely deep liquidity. And basically, whenever there's a new asset listed on Aave, it gets quite a lot of traction, whether it's like we had with the Pendle P tokens, PT tokens as an example, or staked ETH, or wrapped versions of, for example, Bitcoin. There's a lot of scaling that happens. But something we want to enable in the future is that how we can empower a lot of innovation and seed that innovation with liquidity. So, for example, if we have builders today in this room and they have some sort of an idea of creating a borrowing configuration or using RWAs as a collateral, or some sort of like a unique borrowing configuration that goes up on the risk curve. So how Aave could actually enable and empower that type of a use case. So we're introducing a new type of architecture with liquidity hubs and liquidity spokes. So liquidity hubs are where the liquidity is stored across the whole protocol, and spokes is basically a borrow configuration that every user always enters into the protocol, but the liquidity itself is stored in the liquidity hub. So what it means is that if you create some new type of innovation, you can request liquidity from the liquidity hub, and that's automatically funded that you can access, that your users can access into that. So what we're solving here is that any new type of innovation can get the direct flywheel effects from the Aave protocol and the deep liquidity that it has. And it also means that that liquidity doesn't need to be incentivized with rewards, because you get direct access to the whole pool. And what we want to actually see is different kinds of innovations, risk profiles being able to be utilized in Aave, segregating the risk, but without segregating the liquidity network effects. And I think that's a really unique value proposition and can fuel a lot of these upcoming use cases, whether it's RWAs or just moving further down the risk curve. And for the users, it means that users can actually first time position themselves across that risk curve. So you can actually supply liquidity or borrow based on what is your risk appetite as well. And I think that's a really good value proposition.
And previously you talked about resilience as well and security. With Aave V4, do you think it's going to be more secure, more resilient? And would you say it's more secure than Lehman Brothers, for instance?
Yeah, I mean, typically when you look at decentralized systems and traditional finance, you have various types of risk categories. And it can be the third-party risk, the custodian risk, and DeFi really by design eliminates a lot of these risks. So you virtually don't have, let's say, custody risk because you are self-custodying funds and interacting with Aave directly. But it introduces other types of risk, which can be, for example, your key management risk and how to deal with that as an alternative, smart contract risk or counterparty risk of the assets as well. So with this approach and the new design, we're able to segregate all these counterparty risks that comes from these assets that are listed in the protocol in a way that they create a siloed risk, but at the same time without limiting the liquidity network effects that comes from a global liquidity pool. And we want to build the system in a way where these liquidity hubs can be also completely permissionless. So if you want to run your own infrastructure, that's totally possible, or you can rely completely on the Aave DAO or Aave risk managers to basically manage the risk for you. Another interesting thing we're implementing is a feature called risk premiums. So typically when you go to these lending protocols and when you borrow funds, you're paying the same rate regardless of your collateral composition. So what we want to change is that if you produce more risk into the protocol, you're going to get charged less. So if you only borrow against ETH, you are going to pay a base rate on the USDC
Which makes
borrow.
sense, yeah.
And if you add more risk, then you're paying a premium for that. So this is kind of like a mechanism to price the risk and reward more accurately within DeFi.
And one thing you recently launched was Umbrella. Can you explain what it is?
Yeah, something that Aave has always had is this concept of protection of the users. And in the past, it has happened in a way where we had a safety module where you have certain amount of deposits in the safety module that covers any kind of excess debt or shortfall event, which can be based on smart contract risk, counterparty risk, or Fed liquidations, for example. And those reserves usually has been based on the Aave token. So Umbrella is changing this concept completely by not leaning into that Aave reserves, but instead introducing the ability to secure and protect and backstop the risk with the A tokens. So users who actually want to earn additional yield that are supplying, let's say, stablecoin liquidity or ETH into the Aave protocol, they can restake their tokens into Umbrella, get additional yield, but also take the first kind of like risk of the protocol. And what it means is that then we don't need to use the Aave token as a backstop mechanism, which is great for the token itself. But secondly is that you actually share the risk with the users that are willing to take that additional risk of the users that need that type of a protection. So it's a really great tool and kind of like a selling component for integrators and users that are less comfortable with DeFi, but will be more assured when there is this type of safety mechanism.
So if you're supplying tokens to these reserve funds in Umbrella, you're getting high yields, but at the same time, there is a risk that this money is going to be used in worst case scenario?
Yeah, and the risk is basically 20 days. So you lock up the funds for 20 days. And what I like about the system, it's basically, it backstops a particular reserve. So USDC Umbrella protects the USDC reserve, and it's very asset specific.
Okay, cool. And Aave V4, when do you think you're going to launch?
Well, we've been building it for quite a while, but we're in a place where we're comfortable with the technical implementation. So now it's more about optimizing the final implementation of Aave V4. It's a really exciting version because we remodeled the whole architecture that we had on the previous versions, and that's been a lot of work, but also different types of design and technical decisions of simplifying the protocol, making it more modular, but also making it very easy to maintain for the future and expand as well. And what's interesting about the whole V4 is that anyone can start then contributing directly into the Aave protocol, expanding it or improving certain modules or adding new modules into the protocol.
I'm sure everybody in the room has this idea that Aave is such a big team, they have massive resources, but actually, like, how many people are working on V4, and how do you make sure that it's going to be perfect when it launches?
We have roughly, I think, directly a dozen engineers, mostly on the smart contracts that are working. So it's very lean team. So I think Aave is going to be a technology that is going to be used by billions of people in the future. But it's such a kind of like a simple piece of infrastructure. If you compare it to the traditional banking and how many engineers you have in fintech or from that traditional financial infrastructure perspective, it's very small. Like our headcount is very lean and small in comparison. But also, we're trying to build something very powerful in a very simple way. But it is a technology that will scale in the future for also into the traditional finance.
Yeah, I wouldn't say it's very simple, but I hear you. Compared to finance in general, it's very small for sure. I want to switch gear. A topic you've been very vocal about is RWA, real-world assets. Why do you talk a lot about it? Why is it important in 2025?
One big thing about the DeFi is a lot of DeFi is powered by crypto assets. So a lot of the yield comes from crypto assets as well. And I think going down the line, to scale DeFi in overall, we have to use Aave and DeFi for agnostically to any asset that has some sort of economical value and could exist on chain. So what I think that stablecoins has been really great, kind of like a benefit for DeFi, because stablecoins provide stability, but the biggest feature of stablecoins is that you can access DeFi yield, and you can't do it in any other way, actually. To access DeFi yield, to consume DeFi liquidity as a borrower, and that creates the interest rate market. So stablecoins are probably outgrow the native crypto assets at some point, but then actually what's going to be even bigger is the RWAs, so bringing traditional assets into on-chain, and then being able to use Aave agnostically for these assets. And the way we're approaching this field is with the Horizon deployment. So Horizon is a Aave market where you can use permissioned RWAs as a collateral to borrow a permissionless stablecoin liquidity like the Aave native Go stablecoin or USDC. And why is this important is that the more we get the value out of the traditional system on chain, the bigger the DeFi opportunity will grow. So for example, a lot of the economics of interest rate markets are driven today by central banks. So for example, we have a specific rate in Fed. European Central Bank has a rate which recently dropped a little bit down, and Bank of England has its own rate. So a lot of the yield in traditional finance is driven by central bank economical planning. Now, we know that at some point these rates are going to go down because you can't keep high rates for a long time because it stalls the economy. You get less, the participants in the economy, they move less funds, slowing down the economy, risking a stagflation. So when this opportunity goes down, the DeFi opportunity increases because DeFi is going to be the best place for all kinds of financial opportunities distributed globally and can be integrated from any part of the world, essentially. And RWAs is a way of expanding that opportunity. So there's so much of the crypto native yield that can be distributed. So to scale, let's say, billions of people, we have to have RWAs and create these financial opportunities by borrowing against RWAs, creating interest rate markets, and then allowing anyone to tap into that yield opportunity across globally, whether you are building a DeFi interface or a fintech or a traditional asset manager or a bank.
And do you have discussions with traditional financial institutions, with trading desks and things like that? And do you say, hey, maybe you should tokenize these assets and trade in a tokenized way to be more efficient and get more yields, better performance?
Yeah, and I think it's been always like an on and off discussion, except the past 12 months, I think has been probably the most active time, at least for us. In the sense, I think that BlackRock coming with the Biddle Fund has been driving a lot of the excitement. There's a lot of asset managers also today here that are thinking about tokenization, or they have already live assets on chain. One of the biggest challenges always for tokenization is to understand what is the specific use case and what you should bring on chain, and what could provide the value. And then how do you sell within your organization that value add? Because I think we have to think beyond the use cases of selling traditional financial assets to crypto audiences, because crypto audiences are more interested in crypto assets and that side of the risk curve. But there is a lot of value that you can have when you tokenize assets and create utility. And the utility comes from decentralized finance, and it comes from Aave. When you can actually collateralize your assets, borrow against them, creates interest rate markets and creates direct utility. And in DeFi, you can do things that you can't do in traditional finance. You can't go at, let's say, evening on a Saturday, borrow in one transaction against your assets and return them in an hour or, let's say, the next day. There's a lot of inefficiencies in traditional finance that DeFi fixes by just nature, how it's built by design.
Yeah, being able to work 24/7, basically. I want to switch gear and talk about stablecoins for a minute. I'm sure you've seen last week that Circle went public in the US. The market reaction was pretty insane. They raised quite a bit of money when going public. Do you think it's a win for the stablecoin ecosystem?
Yeah, definitely. I mean, I think any legit company that needs additional capital and choosing capital markets to do so is beneficial. They have better access to the liquidity, better opportunities, not just only funding their activities, but for M&A as well. Because something that Circle doesn't have is the distribution. They have the infrastructure. So I'm expecting actually focus also in obtaining distribution as well, whether it's an exchange or some sort of other form. And I think we're going to see a lot of stablecoins coming also from the fintech space, but also the kind of like a big tech as well. That is going to happen. And I think that...
Well, Facebook tried. They didn't really succeed with stablecoins.
Yeah, I think it was too early, too big and too early, and the structure wasn't necessarily the one that helped them to achieve this mission. But I think they will come again, and we'll see others doing the same. And there is a value, because if you have billions of users and you are able to settle transactions between those users and offer, for example, DeFi, that's going to be a big thing. So DeFi is going to be a really critical piece of infrastructure, not just for fintechs, but for big tech. And it boils down to ability to earn yield, but also down the line, extending credit. And that's going to be the really exciting opportunity to extend credit globally without basically banks and traditional finance, and providing the best opportunities there. So economics of scale probably will push these stablecoins to maybe we have like 3 or 4 or 5 big ones instead of 100 different ones. But they all will benefit from DeFi.
And you have your own stablecoin, Ghost. How is it doing?
So Go as a stablecoin is
Go, yeah.
Go, yeah. What we want to achieve is resiliency. So the same way as we started Aave in the first place is that we wanted to build a resilient alternative of existing lending infrastructure and lending businesses. So we've done that with Aave, and we want to do it with Go. So stablecoins are great, but they still have single point of failures, the centralized stablecoins. But with Go, we actually want to provide a resilient alternative. And also, what Go does for the users, it's effectively bringing them a predictable borrowing cost, because the rates in Aave are fluctuating based on the supply and demand. And for the Aave DAO, 100 million worth of Go is creating the same amount of revenue as 1 billion worth of USDC or other stablecoins. So it has a really big impact. And more recently, we launched SGO, which is a kind of like a savings product that you can earn 7% yield on Go without any cooldown and without any slashing risk. And it's purely redistributing the revenue that the Aave protocol is earning on Go lending on the Aave protocol back to the users that are using this savings module, essentially. And that's a really interesting opportunity to get risk-free yield in DeFi.
Yeah, it makes sense to have your native stablecoin, basically. One last question, because we're nearly out of time. I know you're a big Ethereum believer. Bitcoin has been rising like crazy. Other chains are sort of hip right now. Do you think it was the right bet to believe in Ethereum from day one until today?
Yeah, I think it's also like the only place where you can like build very kind of secure protocols in the sense that there's EVM is well known, and also the tooling is in a really good place. If you go to other ecosystems, you can build DeFi, but you don't have the same tooling, and it's especially hard for new DeFi builders because you want to build something really safely and securely, and if you don't have the ability to write fuzzy testing or have a proper test suite that is well integrated into the blockchain system, ability to simulate, fork the blockchain, and simulate different transactions and states and play with the block time. If you don't have these tools in other networks, it's going to be hard to build very safe protocols and test them properly. So Ethereum is the only place that has this, obviously because there's been DeFi and there's been building on not just DeFi, but all kinds of applications for years now. And then the fact that Ethereum has a lot of liquidity, and those liquidity network effects are quite important. So Aave has grown most in basically in mainnet and DeFi as well. So I think Aave is agnostic to technology as well. So we do have an implementation in Move that we're launching on Aptos. So we don't purely build only on Ethereum, but that's where the most of activity and liquidity is at the moment.
All right, Stani, thank you very much, and have a good day in Paris. Thank you.
Thank you.